Credit is very important. Without credit score, it's hard to get a loan. With low credit, you pay more in interest. What builds credit? I do have some bullet points in front of me, so I will be looking down. Number 1 is payment history. Have you paid your bills on time? Number 2 is the amount you currently owe on your credit. So you have credit limits of $1,000, you have $999, it's going to hurt your credit. If you have under 50%, it's going to help your credit. But first of all, you have to have credit. So let's start in the beginning. 18-year-old goes to college, gets a credit card. Mom and dad educate them or have them come to me of the importance of credit, how to use it correctly, how if you don't, it will hurt you, and then how to only spend what you can afford. Well, in today's world, that everybody runs up credit cards. I get it. No judgment. Once they're run up, we talk about how to get them under 50%, how for their credit to go up. Big thing for a lot of people, they say to me, man, I can't get my credit above a 720. Well, Johnny, you know what? You've only had credit for a year, 2 years. John, you did great. You paid off your truck. You only have one credit card, and you just got your mortgage 6 months ago. It's going to take time to build your credit. So the person with length of credit, with using credit properly, with active credit, is going to have a better credit score. It takes time. New credit. How recently you've applied for accounts. So a lot of times when we're doing some coaching for people, they haven't had a credit card in 20 years. They paid cash for everything. They don't have any credit. So we get them a credit card. It's going to take a little bit of time. What you don't want to do is after you have established credit and you're trying to get ready for a home, is take out 20 more credit cards. Not a good idea. If you're in the beginning stages and you have one credit card, we might tell you to get another one. It depends on when your timing is. Credit mix, the types of credit you have. Lines of credit versus credit cards versus store cards versus car payments versus mortgages. They all affect your credit differently. Also, a big misconception on credit. Credit karma is not always the right number. People say to me all the time, it's an idea. When you have a hard pull done for a car or for a mortgage, it is looked at differently and the credit scores are different. The key in credit is you got to get it. You got to start with it. If you haven't had credit, call me. Usually you can get a credit card. Be careful of what the interest rates are. If there's fees they have to pay monthly and things like that. Second, get ready to manage your credit properly. Third, we've all had dips. If it's not managed properly, how do you get out of that situation? How do you work a budget? Fourth, be patient. Something none of us are in our world. We want everything yesterday. I want to push button, get. Give yourself patience. If you got to build your credit back, or if you're just starting out, the length of credit and how much time it takes. New credit, be careful. At times it's smart to build credit and to get new credit, and other times it's not. Again, you're 2 months from buying a house and you go open 5 credit cards. It's not going to be happy with you. But when we do a time and a plan in buying a home, which I constantly talk about in the beginning stages, yeah, I'm going to tell you to get credit cards. Well, my mom says it's going to dip my credit score in the beginning. Yeah, it is. But that's okay, because it's going to build it longer term. What happens then if I had collection items or had a bankruptcy? Can I get my credit better? Yes. Ed, what's your feeling on these national companies that consolidate your credit cards and pay the creditors less money? I think it's horrific. I do not think you should do it. This is not stated by my company. This is Ed Moloney. I think it's one of the worst things out there. I think it's a marketing scheme. I think these companies take big money, and I think it's not the right way to go. Well, what should I do, Ed? You should pay your debts. You can work with your creditors yourself. I can give you some ideas, but do not, in my opinion, hire these companies. Why? They have your payments made at half. They negotiate it. Your credit score goes down almost as bad as a bankruptcy in some cases. Please call me before you do that. I'm sorry I'm so passionate. But I see people trying to do the right thing and they do the wrong thing. I'm here for any credit questions. Remember, with time and a plan, we can fix anything. For example, I weighed 245 pounds. Today I weigh 188. I was a type 2 diabetic, I still am, and my blood sugars are lower than they used to be. Why do I share this? Because it was painful times for me. Credit can be painful for you. We can help. And I am empathetic, compassionate, and I love what I do. and I want to help you. Have a good day. And I smile. Bye now.